And welcome back. As I mentioned in my previous video, the current sales pace for home sales in the US is at its lowest levels going back to October of 2010. That's based on closed home sales for January. However, though, rates have been surging over the past 3 months, and actually it's getting a lot worse. This housing market slowdown is actually getting a lot worse. So in today's video, I can explain what's happening right now in our US housing market, looking at some leading indicators of home buying demand to give us some insights about where our housing market is headed here. I'm also going to provide some analysis regarding the current trends right now regarding mortgage rates and how that's currently impacting home buyers right now, especially compared to the lows we saw back in early February when rates were at 5.99%. So I have a lot to cover in today's video, but of course before that, if you guys are looking for a real estate agent referral, whether you're looking to buy or sell a home in virtually any parts of the whole United States, then check out that link below, which is homeandmoney.com/Jason to get started today. And of course, I invite you guys to subscribe as well. So take a look at this. This is a report that was just announced today, which is February 22nd from the MBA, and this is pretty mind-blowing here. At least in my opinion. Let me know what you guys think. So mortgage applications decreased by 13.3% compared to 1 week ago. Of course, if you guys all follow the channel, you guys all know this is based on refis plus applications for home loans in order to buy houses. So refis plus purchases. And this report right here is for the week ended February 17th this year. So the refi index, which of course is a measure of the number of people submitting applications for refis, shocker, decreased by 2% compared to the previous week. It's down 72% compared to the same week 12 months ago. Enter this though, look at this. The seasonally adjusted purchase index, which is a measure of people submitting applications in order to buy houses or applications for home loans to buy houses, decreased 18% compared to 1 week ago. In one single week, their index decreased by 18%. Also, compared to 1 year ago, it's down by 41%. So according to Joel Kahn, who's the MBA's Vice President and Deputy Chief Economist, he would be their VPDCE. Made that up. Anyways, according to Joel Kahn, can you guys tell I like making these videos? I make all these corny jokes. Anyways, according to Joel Kahn, mortgage rates increased across all loan types last week, with a 30-year fixed rate jumping 23 basis points, that's 0.23 percentage points, or 23 basis points, to 6.62%, the highest rates since November of 2022. However, though, rates have actually increased over the past couple of days, though, which I'll share that with you guys here in just a little bit. And of course, because rates have been increasing greatly over the past 3 weeks, that led to this huge decrease of purchase applications, down 18%, and also dropping to its lowest level since 1995. Joel Kahn also says this time of the year is typically when purchase activity ramps up, but over the past 2 weeks, rates have increased significantly as financial markets, of course, digest the fact that inflation is probably going to stick around longer than anticipated. The increase in mortgage rates has put many homebuyers back on the sidelines once again, especially for first-time homebuyers who are most sensitive to affordability challenges and the impact of higher rates. So have a look at this. Here's average rates today according to Investopedia.com. So average 30-year fixed rate mortgages are averaging at 7.04%, of course, for people with exceptional credit. 7.04%. According to the Mortgage News Daily, as of today, which is the 22nd again, look at this. Average rates at 6.88%. Not too much off the 12-month high that was set on October 20th last year at 7.37%. Now it's 6.88%. Also, FHA loans are at 6.26% and VA loans are averaging at 6.27%. So when looking at rates for a 30-year fix now, again, 6.88% compared to 1 year ago. 1 year ago, rates are at 4.12%. That means rates have increased by about 276 basis points or 2.76 percentage points compared to 12 months ago. Additionally, at 6.88% right now for the average 30-year fix for people with exceptional credit, this is actually the highest levels going back all the way until November 9th last year when rates are at 7.22%. But of course, there's more. As of February 2nd, average rates are at 5.99%. This means over the past, 3 weeks alone, rates have increased nearly 1 percentage point. That causes a 10% decrease in buyers' purchasing power. So speaking of that decrease of nearly 10% in buyers' purchasing power, take a look at this as well. Because for someone looking to buy a $400,000 home, putting 5% down, compare this to February 2nd when rates are at 5.99%. You're gonna have to pay hundreds of dollars more for your housing payment. So again, $400,000, 5% down. That would mean your down payment would be $20,000, of course. As of February 2nd, rates are at 5.99%. That would mean your P&I payment, or principal and interest, would be $2,275 per month. So fast forward to today, though, look at this, $400,000, 5% down. At 6.88%, your new housing payment would be $2,497 per month. That means you would have to pay approximately $220 more per month compared to just 3 weeks ago. And that equates to a 10% increase in your average monthly housing payment. So because rates have increased nearly 1 percentage point over the past 3 weeks, that's going to increase your average monthly housing payment for a $400,000 home purchase by $220 per month. And that equates to a 10% increase in your average monthly housing payment. I mean, that's a significant increase, $200 more per month compared to just 3 weeks ago, which is likely to put more home buyers on the sidelines. Here's what we also know as well. For people searching for homes for sale on Google, take a look at this, because the interest over time over the past 12 months is this right here. The index right now is at 76. 1 year ago, the index was 98%. This means the interest over time for this search term, which is homes for sale on Google, has decreased by about 22% compared to 12 months ago. Now, having said that, just because someone goes onto Google and searches for homes for sale, it doesn't mean they're a home buyer or they're going to be purchasing a house and closing escrow in the following months. But it's just kind of one metric that I personally follow to get a small sense of where our housing market may be potentially headed. And speaking of that, take a look at this, because we did see a slight increase after Christmas, which of course makes sense. A lot of people are not searching for a new home to buy during the holidays here. Of course, that's entirely normal. But ever since then, the interest over time for homes for sale has been more or less flat. Here's what we also know as well, because according to Redfin, according to the Redfin Homebuyer Demand Index, which of course is the index which measures requests for home tours and other home buying services from Redfin agents, that actually decreased 1% from 1 week ago. And this is, by the way, a report that was posted about a week ago. So their demand index decreased by 1% compared to 1 week ago, and also from 1 month ago as well for the week ended February 12th. However, though, it's still up by 17% compared to the lows that was seen in October 2022. But even though it has increased by about 17% compared to last October, it's still down by 22% compared to 12 months ago. And here's a chart showing just that. In orange is 2023. Here is 2022 in red. The blue line's 2021, and here's 2020. Obviously, a giant decrease when we had more or less stay-at-home orders across the United States because of COVID, of course. So look at this, because on a year-over-year basis, again, down by 22%. Compare this to the lows that was seen in mid-November, actually mid-October, when rates increased to 7.4% approximately. And that's why they saw this huge decrease in demand, of course. But has been decreasing compared to the past couple of years as well, because look at 2021. 2021's right here. Of course, here's 2023. So the current levels right now for that Redfin scene for home buying demand is below levels compared to 2022 and of course 2021. Now, having said that, the current levels right now is still above what we saw back in 2020 at this time. Additionally, it looks like their index here is actually below levels that was seen on January 1st this year as well. So that's Redfin's Homebuyer Demand Index. Let's have a look at this right here. This is actually a new report that Showing Time has been releasing over the past, I would say, week. They actually just added 2023's numbers. And these are real estate showings across North America, according to Showing Time. So take a look at this, because this is kind of have some mixed reviews or mixed trends that we're seeing in the US right now. Because Showing Time is reporting for the week ended February 21st. And by the way, this is a 7-day moving average. So for the week ended February 21st, there was a 14.1% increase in real estate showings in North America compared to the first week this year. And this actually is quite a bit more than we saw last week. So for example, for the week ended February 14th or February 15th, there was only 7.3% increase compared to January. Now again, it's an increase of 14%. When we add on 2022 to see how it compares, it has been more or less moving in unison, more or less compared to 2022. So for the week ended February 21st, again, this year up by 14%. Last year, we saw an 18% increase compared to the first week of 2022. Now it has increased by 14%. So one disclaimer that I have to mention in this report right here is that this does not show every single real estate showing across North America. That'd be virtually impossible to share stats on that because there's different ways to get access to the house keys and to show your house or show your buyers the house. So Showing Time is a service that some agents use, whereas some agents do not use them. So for example, in Sacramento, where I live and work as a real estate agent, I would say chances are more often than not, real estate agents do not use Showing Time. Instead, they open an app on their phone, type in their code, get access to this lockbox that's Bluetooth enabled, and get access to the house key. And we do this rather than calling Showing Time to schedule an appointment in order to show a house. But again, this is just one metric that I personally have tracked because it does give us some indication about home buying activity, just like the search term for homes for sale on Google. In any case, let's move on. So here's another report I also want to share with you guys as well. This is from the MBA as well, a report that was published on the 17th of February here. And this is based on mortgage applications for brand new home purchases for January. So for January, mortgage applications for new home purchases decreased by 3.5% compared to 1 year ago. However, compared to December of 2022, applications increased a whopping 42%. So in other words, compared to the previous month, we saw a giant increase by 42%, but we're still down by 3.5% compared to 12 months ago. There's a couple of things I want to mention regarding this because obviously in December, our housing market is virtually frozen per se because a lot of people do not want to buy a home during the holidays. So it's entirely normal to see an increase of applications and of course an increase of contracts being signed each January compared to December. However, though, this 42% increase compared to 1 month ago is definitely something to follow here. Now, having said that, I would love to see historical averages over the past 10 years to see if 42% is normal for a month-to-month change in January. So that's number one. Number two is that rates back in January were around 6% to 6.4% for the entire month of January. Obviously right now, rates are much higher than that. So it's gonna be really interesting to see what's gonna be happening with our housing market in February, March, and especially in April. Also, according to Joe Kahn of the MBA, he says applications for new home purchases increased in January, driven by typical seasonal patterns and lower mortgage rates. The 30-year fixed rate declined by almost 40 basis points over the month, and this stirred some homebuyers to act, especially those who might have delayed their purchase when mortgage rates were, of course, much higher. The MBA's estimate of seasonally adjusted new home sales in the US was also up robustly, seeing a 13% gain in the sales pace. So what he's seeing right here is that they actually look at the number of applications for new home loans and actually provide an estimate regarding new home sales for the month. So because applications actually increased by 42% compared to December last year, they're saying that new home sales actually increased by 13%. Again, just our estimate, an increase of 13%, which by the way, I'll have an update for you guys regarding new home construction numbers, or actually say new home sale numbers, as well as housing inventory for new homes in about 1 day, because the U.S. Census Bureau reports new home sales and inventory numbers on the 24th of February. So of course, once that report's released, of course, I'll make a video for you guys, and we'll see if this 13% gain of new home sales compared to December is right or if it's wrong. And by the way, if you guys are curious what type of loans home buyers are using right now in order to buy brand new houses, approximately 68.4% of all loan applications for January came from conventional loans. FHA was at 20.3%, and VA made up about 11% of applications. And with that said, please comment below your biggest takeaways from today's video. Also, if you guys got any value in this video whatsoever, then please hit the like button. Of course, I appreciate you. Appreciate you guys watching this video, and I'll see you on the next one.